Hi, my name is Moses, and I'm the lazy frugal millennial. Exactly 1 year ago, I invested $15,000 into 4 different stocks. If you want to see that video, I'll post a link to it down in the description, but fair warning, I still hadn't figured out my video audio back then. It has been a crazy and record-breaking year in the stock market, and my portfolio also had a crazy year. And I'm sure you're all just dying to know how much I made, but of course, it's complicated. Let's start with my first investment, which is Virgin Galactic, or SPCE. It has been an absolutely roller coaster year for them. I invested $2,000 into Virgin Galactic at an average price of $26.21 per share, which netted me 76.3 shares. In just 1 month, my investment more than doubled to $4,500 because they announced that they were going to do a test flight in February. I still can't say February.
This was in early February.
But this investment gets a little bit crazier because I also played with some options. Options trading is 100% just gambling, but in this case, I happened to get lucky. I liked Virgin Galactic so much that on January 25th, I spent $305 on a $50 call option expiring in March. And only 5 days later, I sold that option for $1,350, profiting $1,045 in the process. Since the share price did go above $50 per share before my option expired, I could have held on to it longer and made even more money, but I'm not going to complain about tripling my money in 5 days. Unfortunately, the February test flight didn't end up happening, so the share price went all the way down to $15.50 in May. At this point, I was now down $800 on my investment. They did have a successful test flight on May 22nd, and that sent their share price skyrocketing again. Then they had their first fully crewed test flight on July 11th, and that included the founder Richard Branson on board. In the lead up and the excitement to this flight, their share price ended up going all the way up to $55.91, meaning that my investment doubled again. During this time, I was playing with some options again, and I spent $219 on an option spread and made a $121 profit reselling them. But then, after this flight, their share price ended up going back down again. The first thing that caused their share price to drop was that they announced that they were going to issue more shares, meaning that current shareholders' shares would get diluted and would be worth less money. The second issue was that they went way off course on the flight with Richard Branson, and it was so bad that the FAA suspended their flying license. Right now, their share price is sitting all the way down at $12.37, meaning that my investment is only worth $943. So on my Virgin Galactic holdings, I have lost $1,056 or 53%. But if you include the $1,166 that I made from options trading, I actually ended up profiting $109 on Virgin Galactic. I'm still a strong believer in the future of space travel, so I'm going to hold on to my investment. Since my January investment was diversified, we still have a chance to redeem these losses with the other stocks. So let's take a look at the next one. I put $3,000 into Jets at an average price of $22.29 per share, netting me 134.6 shares. This is an airline ETF, so I knew that it was going to be a very volatile investment, but I also saw a lot of opportunity in this sector. Jets peaked in March at $28.71 per share, which meant that my investment was now worth $3,864, which is almost a 30% gain. During this time, vaccine rollout was ramping up, and it seemed like the end to the pandemic was in sight. The share price stayed around this level until June, but then it started sliding down. During this period, the share price leveled off to about $23. Then, as we got into the winter, airlines started having tons of problems with cancellations, and also Omicron was becoming a concern. And airlines stopped receiving free tax money at the end of September, so they were having to foot their own bills now. Share prices slid again, and for the last month, it's been sitting between $21 and $22. In December, I received a dividend of $21.75 from Jets, so I'm going to call this investment break even. I didn't really make any money off of Jets, but I also didn't really lose any money. I think that's a pretty good outcome considering how weird last year was for travel, but I'm going to let this investment ride and hope for a better 2023. My next investment was Brookfield Properties, and this investment had the weirdest year out of all the others. I invested $5,000 into Brookfield Properties at an average share price of $16.91, which netted me 259.6 shares. I really like this stock because they were maintaining a 90% rent collection rate and they were still paying a quarterly dividend while a bunch of other real estate funds had suspended their dividends. But on July 26, Brookfield Properties went private, meaning their parent company Brookfield Asset Management bought all the outstanding shares and took it off the stock market. The compensation option I chose was to get $18.17 per share that I owned. So including the dividend that I got paid in March, I made a 9% return on investment in only 7 months. But now I was sitting on $5,500 in cash and I had to figure out what to do with it. There are tons of real estate funds out there with their own pros and cons, but I chose to put my money into Iron Mountain, or IRM. Iron Mountain is best known for their secure storage facilities as well as their secure document destruction services. You might even recognize one of their trucks. They own over 1,500 facilities around the world and are responsible for holding the wills of Princess Diana and Charles Darwin. They also hold all the master recordings for Frank Sinatra, Universal Music, Sony Music, and Warner Music. Iron Mountain makes money off of both their real estate holdings and their services, so they're more diversified than most real estate funds. But the reason this stock caught my eye was that in 2017, they started buying up data centers around the world and are now moving into the secure data storage industry. So on top of being a real estate stock, this was also becoming a tech stock. Right now, they own over $14 billion in assets and they have an annual revenue of $4 billion. I like this stock so much that I decided to add even more money to my investment. So in July, I invested $7,700 into Iron Mountain at an average price of $43.92 per share, which netted me 175.6 shares. Since then, I've received 2 dividends, which total $217.20. This stock peaked in December at $52.77, making my investment worth $9,266. Now it's back down to $46.76 per share, meaning my investment is worth $8,428. So in total, I've made $728 or 1% off of this investment. But now let's talk about my last and my personal favorite investment, Tesla. I invested $5,000 into Tesla at an average price of $854.71 per share, which netted me 5.9 shares. In my investment video, I said that I wouldn't be surprised if Tesla dropped 30%. And guess what it did? It dropped 15%. In March, the Tesla share price got down to $563 due to a sell-off affecting the whole EV market. It was looking like the EV bubble had just popped and the party was finally over. My investment got down to $3,300, which is a loss of $1,700. But I had faith in Papa Elon because I knew he wouldn't let me down, so I bought more Tesla. I invested another $887 at an average share price of $643, netting me another 1.4 shares. The share price crept back up through the summer and got back over $700 per share, but then October was when everything changed. Tesla consistently beat the expected car deliveries for the whole year, and then in October, Hertz announced that they were purchasing 100,000 Teslas to add to their fleet. The share price soared 40% in October, and in November, it peaked at $1,229 per share, which meant I was sitting on almost 50% gain. Tesla also broke the $1 trillion market cap, making it one of the 5 most valuable companies in the world. In November, Elon started selling 10% of his Tesla holdings, which sent the share price down a little bit, but it's still riding pretty high. Right now, it's sitting at a share price of $1,106, so my investment is worth $8,075. In total, I made $2,188 off of Tesla, or a 37% return. In total, I invested $18,587 in these 4 holdings last year, and I've made a profit of $3,026. That means that I only returned 16% in 2021, and most of that came from my Tesla investment. While this is a great number for an average year, last year was anything but average. The S&P 500 returned 27%. So really, I would have been better off putting my money in a broad market fund and not overthinking it. But I still made money, so you're not going to hear me complaining. For 2022, I plan to stick to investing in broad market funds and stop messing around with individual stocks. My ETF of choice is QQQ, which only tracks the top 100 stocks instead of the top 500 stocks. It has a relatively high expense ratio at 0.2%, but over the last few decades, it has well outperformed the S&P 500, so I think it's a pretty good choice to stick with. That's all for now, so thank you for watching my video. If you enjoyed it, then please like and subscribe to my channel. Let me know what your stock picks are down in the comments. Don't forget to drink your water, and I'll see you on the next video.